My name is Wayne Walker. I'm the Managing Director of Global Capital Market Solutions. Now we'll actually take on the topic of how do you get around these top 3 reasons that traders lose. First, as far as some solutions, it's what we call low leveraging. On many of the Forex platforms that we've touched on, you can have anywhere from 100 to maybe 2 or even up to 500 times leveraging. If you use this low leverage, it actually, as I like to say, it makes or allows that failure is survivable. What do I mean by this, making failure survivable? If you have, let's say, up to 100 times leveraging, if you were to actually max this out up to the 100 times or this 100%, I mean, if you just do the basic math on it, if you're, let's say, wrong, incorrect, and the market moves 1% against you, you're completely wiped out. Now, if you leave this this Hollywood type trading, let's call it Wall Street to the movie type thing, and you get, let's say, realistic with this low leverage, let's say 3, 4, 5, maybe even up to 6% of your collateral or money that's available for trading on one position in these low levels, even if you're wrong, again, you survive. And that's the point. Because traders, let's say if it were, if it were really possible to find, let's call it the world's worst trader, even that person, they will have their day. And that's the thing with trading, particularly something like FX, which changes so much. Everyone will have their day. So one of the keys is that you do want to have, to keep this low leverage. Maybe it isn't as, let's say, exciting as these, scenes from some Wall Street movie, but you will stay in the game because everyone at some point, if you do it enough, you will begin to get it. And the key really is simply surviving. And if you have low leverage, you will survive. The other topic as far as, or a technique to surviving is what we call scaling in, scaling out. And this is one of my personal favorites. And with scaling in, scaling out, what I mean is that you allow the market to speak to you. Meaning that prior to any trades that I place, you will do the research, right? You do some research, I will do research. But in the end, unfortunately, whether it's yours or mine, it isn't a guarantee. And if you use techniques with scaling in, scaling out, you actually, again, allow the market to speak to you. So taking a concrete example, let's say you as a trader or myself, we wanted to be, let's say, take a long or a buying position of, let's say, $500,000 euro dollar. If that's the goal, then instead of starting out with this $500,000, you start out with, let's say, maybe 100,000. Again, after doing your research, having some stop loss orders in, you buy at 100,000. The market goes in your favor, so the market is speaking to you, you're getting the feedback, and then you actually gradually add or scale into the position. And of course, you can also scale out, because if you also buy this 100,000, and the market begins to move against you, then you can also lower the exposure. So in other words, you only take on more risk, or you'll get this permission to take on more risk when things go in your favor. So again, a review. The techniques for surviving in trading: 1, it's going to be low leverage, and then scaling in, scaling out.